Okay. Since Dollar Will has been weighing in and doing a yeoman's job, let's look at a couple of charts outside a little bit. This is actually the Dow Jones, which has been in the news, and this is the latest chart for, I think this 2009, not 2000, but March 9th. And this is this is actually a picture of an old chart that I've been following for a little while, and you can see some of the older stuff. See some of the older stuff right here, which is what a center line. These are. This is, even though this is a picture, this is actually Fibonacci resistance lines. And up here, this is when the market, in my opinion, got way oversold, and it was due for a correction. So basically, this whole thing was a balloon that needed a pin, and the Fed kept pulling the pin away by lowering interest rates. So now what you have now with this coronavirus is the pin that the Fed can't keep away from the balloon. So let's go through a little bit of this stuff. That was the old trend line right here. The upward trend line that we had over the past, I would say, year or so. This right here is a double top. It's usually a bear sign. Even though we have a higher line, that is a higher high, that's a head and shoulders. And what we were looking for is the break right here, below the neck. So a few days ago, a week ago, I should say, with the coronavirus, we got that pin, right? Let's go ahead and enlarge this. You can see what I'm talking about now. We've established the shot, as they say. We got the pin. We got a gap down. We got a huge gap down, which is, when you get a gap like that, that means it's a limit down. You got almost like a limit down and this huge gap. And the second thing that it did is the low penetrated the neck of the head and shoulders. It penetrated the neck. Those are two very, very bearish signs. A gap down and it penetrates the neck, that's a bad sign. So the waterfall that you got afterward is not a surprise. So this waterfall here, it's not a surprise. That's exactly what you would expect. That should have been a warning right there for people to get out. But people thought the Fed was going to be able to step in and save this market, which it had before. Because if you look right here, see if we can enlarge it. Look right here, you got something similar. You got a gap down, and the Fed came in and saved it. What it didn't happen was, even though you had a head and shoulders pattern here, it didn't do what? Even though you had a gap down here, it didn't penetrate what? The neck. That it did in the previous shot. This is the ninth. This is the establishment shot. This is like, it's not the beginning, but it is the essence of what has transpired this week. So you got this, the upward movement. You have the gap down, penetrates the neck on the first day, and then basically it's limit down for the next 3 or 4 days. I should say a week. So let's go to the next chart. All right, this is the second thing that I want to show you guys. Normally you would do this for a long-term chart. Some of these lines, like right here, a long-term. Like these three are long-term, relatively long-term. In the top market, so long-term means about maybe a few months to a year. But you try to set up support and resistance lines. These are support. On top is support. On the bottom is resistance. In other words, when the when a chart or a price comes down, it'll try to find support from where it last bought or sold, right? As you can see, these 2 3 points is where it's last bought or sold, and right here where the neck is, that's what we call major support and head and shoulders, right? From the last chart that I showed you, had a head, shoulders with a neck. And then when it breaks through, this line will become resistance, as you can see right here. So you can magnify that a bit. Now that we've established the shot here, magnify this a bit. As you can see the line coming down, coming through, breaking the support. And then the next day, it tries to rally back up to the last place, last support page, right where the neck is. This is the Fed trying to push these prices back above the neck so the chart pattern can continue into a rally, or at least go sideways and stabilize it. Okay, what you got was a waterfall. I do believe this was a limit down. There's a limit down, a rally, and then tried to find support at the next support line, which was right here. Yeah, I do believe it ended. It did end on a support line that day. And then what happened the next day? It tried to maintain it, but it broke through the support line. And then the day after that, got a limit down. Got a gap. A limit down, tried to rally, and didn't make it, and it actually broke through the next support line. This is a waterfall, folks. This is what they call a black swan. Unprecedented. We got one. Normally you see this in a commodity chart. You don't normally see this in a stock chart. This is highly unusual. Normally you get these gaps would get filled, and then it will continue down. When you see gaps like this, this is panic selling. When you see limit downs like this is limit down. All the way down to here. So it broke through 1, 2, 3 support levels. It finally found support on the fourth line. Okay, the green bars is what we usually call a bear market rally, right? Trying to find a stabilization point. So they pumped money in, and the buyers came in, the plunge protection team came in, bought it back up, pushed it from the fourth support line that it damn near broke through, and pushed it back up. So you had like a 1, 2, 3 day rally. Had a 1, 2, 3 day rally. This is a rally. This is what they call a bear market rally right here. That failed. That bear market rally failed. Next thing you know, when the rally fails the next day, the blood continued. The people that bought in and cleared out their positions, saw it wasn't going to do any good. Guess what happened? Another plunge. This is panic selling. It didn't even hold. It broke through another support level, damn near limit down. This is a black swan. I have never ever seen a stock chart within a week break through 1, 2, 3, 4 support levels. I've never seen this. I've never seen this many days when you reach a limit down and the trading curbs are on. That's 1, 2, 3, 4 days in a row. Trading curbs are on. You get a rally back up. As a bear market rally would normally stabilize like right in here, or maybe go up to the next support level. You get a bear market rally up to right around here, and then it would continue, which is a normal bear market. But the next day it just blew right through it. This is panic selling. This is a black swan. Let's go to the next chart. So what I did, let's go ahead and widen this out so you can get a good look at it. What I did was I made what they call a Andrews pitchfork. Now, Andrews pitchfork is when you get a trend, right? So you get it's the same thing as a Fibonacci chart, but it's a Fibonacci for trends. So normally in a trend, you want the trend will continue or tend toward the center line, and then you have some inner support or inner envelopes, and then you have what they call the outer envelopes, right? Normally, the price chart would tend to gather toward this inner line and toward this inner support. And then if it goes outside of that, it will normally bounce back up and stay within the two outer support lines here. So in other words, it goes through here, it'll try to come back to here. And if it goes too high, it'll try to come back to the center line. So in every case, you're going to see it trying to get back to the center line. And normally this is a sell because it's gotten too high. And normally this is a buy when it's gotten too low, according to what the trend of the move. And this, I had to kind of exaggerate this because this is a fast moving trend. And so I was trying to put up a pitchfork so we can kind of gauge where this trend will actually go. What's shocking is what's shocking is that, let's go to the next chart. What's shocking is the next day this happened, which is something that is completely unprecedented. It's another thing that I have really never seen in a stock chart. Stocks are normally not the wild, wild west. Is supply and demand is a lot slower. So normally what you would get is something where it would actually tend to stay within this center line, and probably tend to stay toward the upper limit of the center line for stocks, right, rather than lower. Okay. Normally what happens if it gets down to here, you see an edge, and then it will bounce back toward the center line. You hardly ever see this, where you get a gap down and it goes completely outside of the fans, outside of the pitchfork. And this is a very aggressive pitchfork. So even though this is exaggerated, but the thing is, this market is almost going straight down. Now it managed to hold itself right here. The Dow Jones managed to hold itself with the help of the Fed right here. But the thing is, this was just yesterday. This thing blew outside of its limits. So basically, even for technical traders, this is a black swan event because the fundamentals are in charge of this bad boy. You hardly ever see something like this. That's a bad sign. When you got a trend right there, and the trend really just started. When it breaks the trend, normally you see something like this on something thin, like a Bitcoin or cryptos would do this a lot because it's thin. So it can happen, which Bitcoin did. Which Bitcoin did something that I didn't think was possible. I've never seen a commodity chart. We'll do that. Save that for another day. But for a major index like this to do something like this, this means you're dealing with something that's really out of whack and out of line. And so, if technical traders are having problems charting this damn thing, and it's a stock chart, if you guys are gonna go into this, you got to be really careful. If you're shorting this, basically you're making a whole lot of money. This is probably a once in a lifetime event where the shorts are actually going to win. If it continues, I don't know what you're going to win because you might not have an economy. But if you're shorting this bad boy and you got the shorts, like long-term shorts, which it's hard to believe that people do have long-term shorts, is because there aren't any buyers buying back the shorts. So at some point, if you guys, you keep collecting the shorts, you guys are going to sell this back. I don't know who's going to have the money to actually pay it off. I guess the Fed is in there paying off the shorts to keep the market liquid. I know the Fed just came up with $1.5 trillion. That's probably to pay off the shorts, because this is unprecedented. You never see this. You never ever see this. But this is just a real short piece on what I saw with the Dow and what the chart looks like. I've never ever seen this. I've never seen a stock chart, especially an index chart, blow through 4 support levels, establish a trend, and then break the trend to the downside like this, this is a very dangerous market. So if you're buying in, if you're buying into this, man, like I said, this is blood, and this is blood on the streets. You got to wait till all the black swans are slayed before you really start really buying into this market. You can trade it if you can, because the volatility is pretty vicious right now. So if you can trade it, but you always trade it to the downsides. But every now and then you're going to get a whiplash, like you're going to get a big move to the upside, trying with a lot of money trying to buy it back to the center line. So unless you got deep pockets, be extremely careful buying this back, because you could get a bear market rally to the upside, a big surge, and clean you out, and then continue back on down to the downside. Because what's happening right now is people trying to switch sides. It's obvious it's going to be the downside. So basically all the momentum, all the money's going to the downside. So if you're buying, this is not a market I would buy into. But anyway, that's all I got for this one. I got a couple other charts I want to put up, but this one's long enough. So this is BGS out. I'll see you guys on the next chart.